Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. A global tech rout snowballs into Asia. Mounting anxiety over frothy valuations and massive AI spending drives investors to trim exposure. Precious metals plummet, with silver falling sharply and gold also sliding as they struggle to find a price floor after their recent market rout. Plus, oil slumps on easing geopolitical risk as the U.S. and Iran confirm talks. But President Trump says the supreme leader should be worried. It has just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, still a lot going on in these markets. Let's take a look at how things are shaping up today. We've got NASDAQ futures. I'm starting with NASDAQ because yesterday, of course, all of the conversation was around the price action in the tech space. Today, we are leaning towards the green. However, yesterday saw the worst two-day rout, two consecutive days of back-to-back losses for the NASDAQ, the worst two-day rout since October. It actually closed below the 100-day moving average. And why? We're seeing selling of those software names, as we spoke about yesterday. Recently, chip makers as well have started to feel the brunt of the selling. And we had earnings come through yesterday. Alphabet, the market a bit spooked out by some of their CapEx spending plans, plus Qualcomm, ARM as well. We're going to talk more about that in just a moment with Annabelle. So that's what's going on in tech space. Handover from Asia Pacific, also pretty negative too, down 1.3%. So the tech rout is spilling over into Asia as well. And then the reason I have euro and pound up today, it's ECB and Bank of England's meetings today. Nobody's expecting a rate cut from either one of them. I will just say yesterday we did have a Eurozone CPI print coming in at the lowest level since September 2024, 1.7%, so a bit below the inflation target for the ECB. But for now, they plan on staying the course at that 2% deposit rate. And then Bank of England, again, no one's expecting a rate cut here. Possibly you'll get a 7-2 split on the committee. And remember, back in December, they changed the guidance a little bit, saying that rates will likely to continue on a gradual downward path, but judgments around further policy easing will become a closer call. So that's your pound and your euro update. But let's switch over and talk about some of the price action in commodities. Really volatile price action there. Gold, take a look at gold. We're once again plunging today, down 1.9%, but that pales in comparison to the most volatile metal out there, silver, down 13% after rebounding fully yesterday and recuperating a significant share of the losses. I think at one point yesterday we got up to around $86. We've now plunged back down to $77. So just really speaks to how much volatility there is going on around precious metals. And again, a lot of the speculative buying and selling that's going on there. Brent also in focus, $68, down 2%. Some questions about whether the Iran-U.S. talks are still going to take place. It looks like they are going to happen, but in Oman this weekend. And then soybeans, I don't usually talk about soybeans, but we saw a massive bounce yesterday, the most since June 2023, after Trump said that China is considering buying more purchases of soybeans. We jumped around 4%. So that is your commodities update. But let's go back and talk about some of the price action in tech. AI angst has helped wipe hundreds of billions of dollars of the value of tech stocks, not just in the software sector, but across the board. Sentiment was further hit as Alphabet, Qualcomm, and ARM all reported mixed earnings. To tell us more, our Bloomberg Asia tech correspondent Annabelle Jewelers joins us from Hong Kong. While all eyes were on Alphabet yesterday, the star performer of Magnificent Seven last year, market seems to be a bit spooked, Belle.
Yeah, quite spooked and spooked by a key number, and this is the CapEx plans for 2026, because they just came in so much ahead of what Wall Street had been expecting. So they are expecting to outlay up to $185 billion this year. Now, the estimate for that number for CapEx was at just under $120 billion. So 185 versus the anticipated 120 or thereabouts. It's a very, very big difference, and that is what investors have really been looking at. And it was also something that the CEO, Sundar Pichai, had to respond to in the earnings call, and he tried to reassure investors that that sort of spending level was necessary. His view is that the AI investments, the infrastructure as well, are driving revenue, they're driving growth across the board, and that is what is necessitating further spending. In terms of the numbers themselves, well, we did actually see Google Cloud revenue for, you can see there that the reading, but coming in strong at $17.7 billion, so 9% growth on the board. and also better than what, again, Wall Street had been anticipating. So they're starting to see better numbers there, but also Gemini, the AI model, and of course has really risen to prominence even just in the last few months, but is rapidly reaching new users, the company says as well. In terms of the fourth quarter sales, again, they did better than expected. Guidance for the current quarter, stronger than expected, so still a lot to like, but those concerns around the capex in particular.
Okay, we need to talk about Qualcomm and ARM. Those stocks down almost 10%, 8% respectively in extended trading. What's going on there?
This is an interesting one. So both of these companies are really plugged into the smartphone industry, but in different ways. So Qualcomm, for instance, they're making the chips that are being used or put into these processors, or processors rather, that run smartphones. And you've got ARM as well, that's getting a lot of its royalties or revenue from royalties on technology that's used by the smartphone industry. And so these companies are really sensitive to what's happening in the memory chip space. We've been talking about this looming shortfall that we're seeing in memory chips that's built because companies like SK Hynix and Samsung are really prioritizing HBM. That is leading to less smartphones being able to produce this year. That has a direct bearing on these companies. So that showed up in the numbers, even though both of these companies as well are benefiting from the build out of AI data centers. That's sort of the silver lining out of all of this.
Yeah, and HBM, for our viewers who are not familiar, is high bandwidth memory chips, the chips that they need for memory for some of these more advanced AI computes. Annabelle Jewelers, thank you so much, our Asia Tech correspondent. So for more market insights, joining us now is Rashmi Garg, Dhabi Capital Senior Portfolio Manager. Rashmi, well, for once, it's not President Trump headlines that's driving the markets. We're actually talking about perhaps a secular tech rout that's taking place in the U.S. and also overnight in Asia as well. I mean, were we due for a correction of sorts in this space?
So currently, yeah, like you mentioned, Jumana, this is a secular rout. Now, I don't think that, a secular rout was what was due. I mean, of course, the stocks have done very well. But right now, it's more of a sentiment of a momentum wind down. And there are other sectors. There's a broadening of sectors. But I mean, if you look at the facts here, if you look at, the capex numbers that have been announced by names like Alphabet or Microsoft, I mean, these are very positive, actually, for some of the players in the tech space. For example, the memory makers. And, just now, Annabelle mentioned about, ARM and Qualcomm seeing the pressures from high memory prices. So the memory makers do benefit from that. So I think right now the sell everything route is actually a bit of an opportunity in some names.
Yeah, and at the same time, what you're seeing is investors have started to punish those companies with huge capex spending plans, like what we're seeing with Alphabet. Should investors not be distinguishing between companies that actually have the cash and the balance sheet to finance those expansion plans versus those that don't?
I agree. I mean, Jimana, that is the right view to take, that if the companies really are like debt free and they're financing this out of their own cash flows, I mean, there should be a distinguishing factor here. That should be a distinguishing factor. However, at the same time, I think what is being questioned is the return on investments on these, capex plans. So, which is where there is a lack of clarity. And, these numbers are huge, like $185 billion for Google. I mean, these are big numbers, and clearly investors want to see whether there will be adequate return on this kind of capex.
Yeah. What about the price action in chips and semiconductors as of late? We were just talking about the memory chip shortage, supply shortage that's going on right now, and that's having a knock-on effect in the space. How do you play it if you still have a bullish view, as you say, potential buying opportunity, but at the same time faced with the supply crunch?
So, Jumana, I think the best way to play it is the memory chip makers, and clearly Korea dominates within the memory space. And, whether it is high bandwidth memory, which is required for AI, or whether it is, DRAM, which is required for a lot of the, devices. both of these, are largely manufactured in Korea. We, of course, have Micron and some other players in Japan as well, but, the large part of the market share is in Korea. So we would be very willing to buy Samsung and Hynix if they sell off, because, I think these are players that clearly benefit from this, trend of higher memory prices.
Mm-hmm. So I want to take you down a slightly different tact as well, because we've spoken about the tech route, but also there has been a lot of volatility going on in the commodity space, particularly in the world of metals. Is that having a knock-on effect to other markets, or is it, again, something that's isolated to participants that are involved in the precious metal space and base metals as well?
I think part of the reason, there are three things here. So if we look at, I think every metal has different driving factors. So if you look at gold, the huge surge that we saw in the price of gold last year and in the beginning of this year, part of it was, related to the dollar debasement trade. Part of it was related to the fact that Fed may no longer be, independent. And then, of course, the huge fiscal deficit of the US and geopolitical risks. So we still think that gold does provide a hedge against these factors. Of course, the last part of the rally was a bit of a froth, and I think it's good that we saw some unwind there. Silver is really high beta gold, and I think that was quite speculative, and the increase in margin requirements of certain exchanges led to the impact on silver. And even today, we see huge amount of volatility. Copper we see as a structural long-term play. The fact that we're talking about the AI build-out, the infrastructure build-out, which is required for AI, the huge amount of electrification that is needed, all of this is very positive for copper. So we are still, we have a long-term view on both copper and gold, and we still remain positioned there. We're very positive on the mining equipment makers as well as a result of this.
Yeah, what about rare earths? How do you get exposure to rare earths?
So yeah, rare earths, I think this is more of a resource nationalization issue where every country is trying to be more self-sufficient on rare earths. And the reason for that is that, their requirement in the, AI space as well as, aerospace and defense. So we like names like MP Materials. There is also, like a rare earth fund that we have, we are invested in. We are also, we like smaller players within the rare earth space. Like in Europe, we like Solvay, which is, which has a very small presence in rare earths, but still it has some exposure there, and it is going to benefit from additional investment.
Rashmi Garg, always a pleasure. Thank you so much. Dhabi Capital Senior Portfolio Manager. Well, coming up, Trump warns Iran's leadership that they should be worried ahead of talks. More details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Oil slumping as Iran confirms that it will hold talks with the U.S. on Friday. That's easing the immediate risk of military action against the OPEC producer. However, as U.S. military forces amass in the region, President Trump has signaled pressure on Iran's leadership.
I would say he should be very worried, yeah, he should be. As you know, they're negotiating with us.
I know they are, but the protesters have said, where are the Americans? You promised them we would have their back. Do we still have their back?
Well, we've had their back, and look, that country's a mess right now because of us. We went in, we wiped out their nuclear.
So that's the question. If we wipe them out,
we have peace in the Middle East. Yeah. If I didn't take out their nuclear, think of it. If we didn't take out that nuclear, we wouldn't have peace in the Middle East because the Arab countries could have never done that. They were very, very afraid of Iran. They're not afraid of Iran anymore.
For more, we're joined by Onur Ant, our managing editor for MENA. Okay, so President Trump saying that the Ayatollah needs to be very worried. At the same time, the talks are actually going ahead this weekend, but not in Turkey, in Oman.
That's correct. And that change in the venue, as well as the format and the agenda of those talks, were made at the request of Iranian leadership. We have seen that the talks were almost on the verge of collapse yesterday, but the U.S. still has agreed to the change just requested by the Iranian leadership. So what is critical at this point is that these changes that were made at the request of Iranian leadership means that, yes, on the one hand, the risk of a military confrontation immediately is somewhat subdued, but on the other hand, all the changes make it all the more difficult for the two parties to come to a meaningful resolution on Friday's talks.
How likely is it that Iran meets the concessions that the U.S. is demanding of them?
Well, the problem is the U.S. officials, including U.S. Secretary of State Marco Rubio, have made it clear that they want to talk about not just about the nuclear file, but also about Iran's missile stockpile and its support for various militant groups in the Middle East. And that's something that Iranian officials, including Arakchi, the foreign minister, has rejected outright. It just is very difficult to see how a grand bargain, a major resolution to all the issues that the U.S. wants to talk about will come out of the talks on Friday in Oman.
Yeah, and let me just ask you, when it comes to markets, we have seen, again, a lot of volatility in commodities markets. Oil is just following the pattern of whether the negotiations are on or off. But there seems to be an embedded geopolitical premium, again, about the uncertainty of what these talks could actually lead to.
Absolutely. The volatility that we've seen, especially yesterday, was a reflection of the diplomatic whiplash. Will the talks go through? Will they not go through? Yes, they are down quite a bit this morning, and that just shows, as you said, the relief from the fact that there doesn't seem to be a likelihood of an immediate war between now and Friday. But on the other hand, oil prices, the Brent prices, are still up about 12% when you compare them to where they were just at the beginning of the year, and just shows that investors are worried that come Friday we may be back to where we were just a couple of days ago, and the U.S. may still be threatening to wage war on Iran, and not only that, but also follow through that threat.
Yeah, Onur, thank you so much. Onur Ant, our managing editor for MENA. And coming up, this week's World Government Summit in Dubai shed light on the growing role AI is playing and how our societies are run. Our interview with Google Deepmind's Chief AI Readiness Officer, Lila Ibrahim, is coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. This week's World Government Summit in Dubai shed light on the growing role AI is playing and how our societies are run. I've been speaking to Lila Ibrahim, Google DeepMind's Chief AI Readiness Officer, on the sidelines of the summit about her new position at the company and the future of AI governance in the region and beyond. I began by asking her about the UAE's ambitious plans in this sector.
From a perspective of having the first AI minister, thinking about how AI gets introduced into schools in a responsible way, how you think about bringing AI into healthcare to help the general public. I think these are all really important advances. So I'm here to listen and learn, having conversations, and also to understand where there might be collaborations, because as we think about the future, we need to start planning about how do we find the right partners to advance this technology with?
Yeah, and I guess a question about just more broadly working with governments. Do governments understand enough about artificial intelligence to be able to regulate it in an efficient manner?
In my 30-plus years of technology experience, one of the things I've seen is that the technology always advances. So how do you find ways to actually bring our technical understanding and expertise, and also understanding of where this is going? But we're not policy experts, so we have to find the right ways to regulate. And we do a lot of knowledge sharing with governments, and that's, again, part of the reason that I'm here, is to say where and how can we try to work together to identify those opportunities.
Yeah, do you believe that there will be some sort of global consensus on AI governance, though? Because obviously different jurisdictions, you have different companies, you have different models, and there's a race going on, a race for disruption. And at some point in the race, maybe some standards will be sacrificed. And I just wonder whether you're optimistic that there will be a minimum level of governance that will be maintained globally.
I think what I've been really pleased about for the past few years now is how world governments have been coming together as part of these AI summits. The next one coming up shortly in India. And as you mentioned, it's not about any one company or one country or one entity. It's the technology, once you release it, it's available immediately to so many people. So we need to find a way to have a shared vision for this globally. And I think those conversations are really important to help bring the public and private sector together.
Yeah.
But, your comment about the race, the way that I look at it is we should be on a race to solve humanity's biggest challenges. And AI is almost like could be used as like a microscope or a telescope. How can we understand the world around us, align on what some of the big challenges are, and start using AI as a tool to unlock potential solutions to that, whether it's around sustainability, whether it's around understanding diseases, to come up with better therapeutics, how to make sure that no child is left behind in the current education system. And that's why I'm in this role, because I believe, one, we have to be responsible stewards of the technology, take that very seriously. And at the same time, we have to make sure that we're maximizing the opportunity to bring our human potential and to be able to flourish as society.
That was Lila Ibrahim, Google DeepMind's Chief AI Readiness Officer. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. Now for a look at some of the other stories we're following today. Bloomberg has learned that SpaceX held meetings last month with banks from outside the U.S. as it targets a listing this year. Sources say one group was made up of European banks, while another included firms from other regions. We're told that Wall Street giants, Bank of America, Goldman Sachs, JP Morgan, and Morgan Stanley are already lined up to lead the listing. French authorities have detained 4 people accused of spying for China, allegedly targeting Elon Musk's Starlink. A French cybercrime unit says 2 Chinese nationals allegedly tried to obtain satellite data from Starlink, as well as other critical entities, including in the military sector. Prosecutors presented 4 people to a judge, asking that 2 be held in custody. Sources say Boeing is cutting about 300 supply chain jobs from its defense division, notifying affected workers this week. But we're told the company is otherwise still in hiring mode with more than 1,300 job openings. It's also looking to help affected workers find other positions in the company. Boeing's headcount at the end of last year stood at 182,000. And a look at markets as we head to the break. Equity futures in the U.S. stabilizing somewhat. S&P only down about 0.1%. Nasdaq basically flat, marginally so. But of course, after a massive 2-day rout, as we talk about the tech sell-off picking up momentum, software stocks being sold, semiconductors, chips, it spilled over into Asia as well. European markets down 0.3%. Don't forget, we have the ECB and Bank of England meetings coming up later today as well. Well, coming up, we'll talk more about markets and geopolitics with Ozan Özkural, the founder managing partner of Tanto Capital Partners. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. A global tech rout snowballs into Asia, mounting anxiety over frothy valuations over massive AI spending drives investors to trim exposure. Precious metals plummet, with silver falling sharply and gold also sliding as they struggle to find a price floor after their recent market rout. Plus, oil slumps on easing geopolitical risks as the U.S. and Iran confirm talks, but President Trump says the supreme leader should be worried. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersetchi in Dubai. Well, a lot to talk about this morning. We've got the geopolitics in focus with those Iran-U.S. discussions set to take place in Oman as of tomorrow. But then we also have the broader secular theme of AI and the pullback that we've seen in some of these major tech stocks and software names, also in chip makers. So that all transpired yesterday. Today, we have the Nasdaq futures basically trading flat, but this is after a 2-day rout, its biggest 2-day rout since last October, and it's currently sitting on about its 100-day moving average. So key technical support level coming through there. Magnificent 7 names, all down 1.8% yesterday. And then, of course, all eyes on the earnings that came through: Alphabet, Qualcomm, ARM, all of them trading negative in extended trading. Handover from Asia Pacific also negative as well, down 1.4%. And again, we'll get to that in just a moment. But keep an eye out for the Japanese election that's coming up this weekend. Euro and the pound in focus too. We've got 2 central bank meetings coming up today, ECB and Bank of England. No one is expecting them to change the path for interest rates, but as ever, the outlook for the economy is going to be parsed very slowly, and whether they give any clues on being willing to restart the cutting cycle, or at least in the case of the Bank of England, give more guidance about when the next cut could come. Switch over and let's talk about some of the price action in commodities too this morning. Another very volatile day for precious metals and also base metals too. Gold slipping a little bit, down 2.4%. I mean, in the context of how much silver is moving, 2.4% doesn't sound like that much. Of course, it is on a normal day quite a lot to take on. Gold sitting just above 4,800. Silver now down 15.5%. So at some point we had recovered. We'd spent 2 days of gains in silver space. But this is all coming down this morning. Again, froth, speculative buying, selling. There seems to be a lot going on in that space. We'll talk more about it with Garfield from the Markets Live team in just a moment. And then Brent also in focus. No surprise that we are down once again, down 2.2%. Now that talks between the U.S. and Iran are actually set to take place. But whether they yield anything, that's a different question. Soybeans. I wouldn't typically talk about soybeans, but we had a big move yesterday. They jumped the most since June 2023, so almost 3 years ago, after Trump said China is considering buying more purchases of soybeans. On the back of that, we jumped about 4%. So that was your move in soybeans yesterday. Okay, let's go back, though, and talk about some of the price action in Asia. Winnie Su is in our Hong Kong studio. Winnie, it's not pretty out there today.
Yeah, morning, Joanna. Exactly as you said, Asian stocks down for a second day, and you can see that the MSCI Asia here down 1.4%, with losses led by the infotech sector down about 3%. It is still that ongoing rotation away from tech and into more value-driven defensive names, and leading losses today, Korean stocks, again, Kospi down about 4%. But for the HS Tech, we are still watching that bear territory, and it will close in that territory if we close at this level. Also, flip the board and take a look at what's going on in Japan, because as you mentioned, yes, we are waiting for that election this weekend. Overall topics here down just 0.1%, and that is way less compared to what we saw in the broader Asia market, partly helped by Sony, which was up about as much as 6% earlier when they announced those surprise results. They had the 22% jump in profit, and also they raised that the forecast for the full year forecast, driven by the strong demand in their entertainment offerings. The yen here stabilizing around that 156.8 level against the dollar. We had that 4 days of weakness already coming through ahead of the election this weekend. When it comes to the 30-year yield, down about 7 basis points. The auction came with quite strong demand, also signaling that the yields look quite attractive at this high level. Back to you, Jemana.
Winnie, thank you so much. Winnie Su in Hong Kong. Well, this AI angst has helped wipe hundreds of billions of dollars off the value of tech stocks, not just in the software sector, but across the board. Beyond that, commodities are also taking a hit this morning. For more on all the market moves, we're joined by Garfield Reynolds, who leads our Bloomberg Markets Live Asia coverage. Garfield, there's an article on the terminal with this really flashy headline saying $1 trillion tech wipeout ensnares all stocks in AI's path. First of all, $1 trillion wipeout, very substantial. And number two, I think most people, when they were thinking about the path of AI and where we go from here, they were concerned about perhaps overvaluations or extended valuations. In fact, what we saw this week is perhaps the real fear is that of competition and cannibalization in the world of AI.
Yeah, well, you've very much put your finger on the point there, Jemana. I was musing with my colleagues that what this week has done is made it apparent to people that AI themes can cause shares to go down as well as cause them to go up. Who knew? And that's a lot of what's breaking out. And so you're getting a re-examination of just about everything. And you look at the very deep sell-off in the Kospi today. TAIEX is also down, although not as much. You know, these were the markets that soared last month, despite all of the geopolitical and also economic uncertainties that were building. And the thesis was that because these markets, the companies there are mostly involved in the infrastructure, in supplying technological hardware, chip chips themselves, but also other peripherals, that they would be okay even if other parts of the AI infrastructure universe might turn out to have overspent or might turn out to get lower profits than otherwise thought. Instead, investors are just going, we need to get out of some of these shares that we just piled into, assuming they could only ever possibly go up. And unlike Monday's sell-off seemed more like sell the things that had gone up a lot because we need to cover losses elsewhere. This is now starting to smell more like retail investors in particular just being pushed to reduce their exposure across the board.
Yeah. Okay. So being pushed to reduce exposure across the board. Let's talk about the price action once again in silver. Just a remarkable volatility there. We're down 15% as we speak. This has all happened in the last hour or so. Really just a reflection of how much speculative froth there still is in that market.
Yeah, and it's reinforcing the what's going on in equities. I've been watching today, at first it was the Kospi that went, that it stabilized, then silver went, and that took the Kospi with it, and then vice versa. And the message I was talking about when it comes to AI themes, you're suddenly turning sour. It's the same with silver, and to a lesser extent, as you pointed out, with gold. These were being bought initially as havens against the potential for geopolitical trouble or for the AI boom to turn bust. But then the amount of speculative fervor that piled into these assets turned them into, instead of being havens, into sort of the ultimate risk assets. They rose by absolutely historic, at an absolutely historic pace. Nothing been seen like it since late 1970s when the Hunt brothers were trying to corner the silver market. So they became unsustainable. We all knew they couldn't go on climbing like this. We thought we knew. Sure enough, they haven't. And now, as I said, that's reinforcing the angst across markets. And it's got investors, instead of thinking, where is the next dip buying opportunity, where are the areas where I need to pull back to safeguard my portfolio?
Yeah. Yeah. Garfield, just a quick one, because we got a question coming through from a viewer, and it's a really good point. Given the extent of the moves that we're seeing across these markets today, are we hearing of substantial margin calls coming through?
So far, unlike some of what went on last week, we haven't heard any serious chatter that there are margin calls involved, which, I mean, yeah, some of these moves have been rapid, but there hasn't been quite the same, straight line down that occurred, end of last week and even beginning of this week, which gels, I think, more with, what I was saying, that sort of general de-risking that's going on, where investors are thinking that they need to safeguard their portfolios.
Yeah, that's exactly it. It's a holistic view of the portfolio at this point. Garfield Reynolds from the Bloomberg Markets Live team, thank you so much for coming on our show. Well, coming up, we're also going to discuss how the latest geopolitical pressures are also weighing on global markets with Ozan Özkural, founder and managing partner of Tanto Capital Partners. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Markets are watching for any outcome from the talks between Iran and the U.S. on Friday, weighing the risk of military action against the OPEC producer. To discuss market sentiment, I'm joined by Ozan Özkural, founder and managing partner of Tanto Capital Partners. Ozan, good to talk to you. Yesterday, President Trump saying Iran needs to be very worried. How dangerous do you think the situation is right now?
I think it's de-escalating to a certain level, and I think it is for the benefit of the region for Iran to lose its nuclear program. So I don't see this progress as a negative per se, but the execution risk is there. So talks have moved from being in Turkey to to Oman right now, but will it yield anything meaningful, and will that mean something meaningful for the public of Iran is a question that
Do you really believe that there's going to be a deal done, though? Because most people I talk to are very skeptical.
Look, let's define what a deal looks like, and let's not forget that almost a decade back, there was a deal called JCPOA, Joint Plan of Comprehensive Plan of Action, and that was ripped apart. So if this is going to be some sort of a renewed JCPOA that has Iran's uranium enrichment program under control, that is a positive for the region. Now, how you execute that is the question that no one has an answer to right now. But I think conversations, Joanna, are better than non-conversations. So at least there is a series of talks that are going forward right now, and let's see how that plays out. But if it plays out in the way that Trump administration hopes to, it's a net benefit for the region.
Okay, interesting. So it's sort of a positive spin on it versus, say, other people that I've been speaking to. But at the same time, if you look at the main risk indicator, we look at oil, and the reason there's so much geopolitical premium right now in oil is because of the Iran premium. Do you think that where we are right now is reflective of some of the risks?
Look, vis-a-vis commodity prices, base metals, precious metals, AI stocks in general, the reality is that investors are finding it challenging to price all of the collective risks that we are looking at right now with this current macro backdrop. So Iran and the conversations around Iran, the reason why I'm putting a positive spin is that having a conversation to de-escalate the situation is a positive in my view. Now, it doesn't take away from the fact that we're going to have to deal with a number of different cases around the world. Oil markets are going to be basically quite susceptible to shocks around geopolitics, as was the case in Venezuela, as it is now in Iran, and potentially what happens in Russia, Ukraine, going forward. And so to me, it's not a short-term negative, provided that the conversations yield something that is tangible.
When we talk about geopolitical risks, it's always in the context of something negative happening. But what about pricing in a positive tail risk? So a positive outcome for Iran, an actual resolution to the Ukraine-Russia talks that are taking place, by the way, here in the UAE. I mean, perhaps investors are not thinking about the positive outcomes that could be yielded as well.
There's so much noise in the market that it's very difficult to focus on the positive just because we have to price a broader set of risks as investors, which we are finding challenging to do across the board. Having said that, from a geopolitical stance, I think Russia-Ukraine is a much more challenging issue to overcome, whereas if a deal gets agreed with Iran, again, it's an assumption, it will be beneficial for GCC, for capital coming into the GCC. So I see the conversations as a positive. Again, we'll see what it yields. I think Russia-Ukraine is more challenging, though.
Yeah, it is. It is for sure. And it's been going on for 4 years now, which is shocking to me. Let's just take a step back and look at the markets, because you have the geopolitics, a lot of headlines coming through from geopolitics, but actually the big market driver the last couple of days has been this rout that we've been talking about in tech. About a $1 trillion worth of market cap has been wiped off the market. Perhaps that is the bigger risk for investors looking ahead, and the hype around a lot of these stocks that people were really excited about last year.
Look, have you noticed, and we have all noticed effectively, that our reaction, the investor reaction to news, especially adverse news, is way more significant and volatile or vicious than it really needs to be. And I think there are a number of reasons for that, and one of which is going to be the escalating cost of debt, long-term debt in particular, what it means for cost of debt, cost of capital. So investors trying to understand, for example, we talked about the Alphabet's, CapEx investments, 185 billion, dollars. Actually, if they can fund it, this should be a positive. The question is, can they fund it? If they're going to go to the debt markets, what does it mean?
Well, they're sitting on a cash pile of $120 billion. So in that case, you have to look at the numbers. It's different for, say, the likes of Oracle, for example.
Absolutely. So can investors differentiate? They should. But market reaction is also about the momentum trade, and it is driven by fear more than hope, as it generally is. One thing I would say, Jumana, though, I think we need to watch the Japanese debt auctions more carefully. I mean, they just came out with a 30-year, which actually went better than people thought it would. But still, yields remain elevated. They will continue to remain elevated, which, again, to my mind, means that investors will have to take a look at what the cost of capital will be for certain companies and price them accordingly. The problem is we're not going to be in any shortage of news flow coming our way. Our reaction to these sayers of news flows can't be so volatile. That's the issue.
So where do you put your money? In defensives, in value, in safe havens?
I think it's a portfolio, and the answer to that question is invest in things that you do understand to a certain extent. But I think in a market like this, with a backdrop like this, I mean, am I going to bet on AI? Yes, I'm going to bet on AI because I think our society is going to need more of this. Am I going to bet on data centers? Yes, I will. But if I'm betting on these things, I also want to bet on the energy infrastructure of these things.
Yeah.
So focusing on areas that will complement this. But then there are fundamental, more thematic areas like water security, food security, that also I think are areas that we will have to talk about going forward. So it's a basket case.
Yeah. Ozan, thank you so much. Thanks for coming on the show. Ozan Özkural, the founder and managing partner of Tanto Capital Partners. Well, coming up, 55 nations join a summit on critical minerals in Washington as the U.S. looks to cut reliance on China. We'll have the details next. This is Bloomberg. The Trump administration has hosted a major summit on critical minerals, bringing together 55 countries to cut reliance on China and secure stable supplies. Vice President J.D. Vance called for predictable investment conditions and a coordinated agreement on price floors.
Today, the international market for critical minerals is failing. Consistent investment is nearly impossible, and it will stay that way so long as prices are erratic and unpredictable.
Bloomberg's chief Africa correspondent Jennifer Zabazaja joins me now from Johannesburg. Okay, let's talk about price floors. It's something that industry players have long been discussing. What progress was made at the summit there?
That's right, Jumana. And specifically with this administration, we have seen them bring up this idea of price floors. But when you talk about what we did see on Wednesday from J.D. Vance, it really seems like this administration is trying to, again, help itself and other allies reduce reliance on China for its critical minerals and also rare earth minerals. So he brought up this idea of a protected trade zone, which in their mind, they believe, as he was just alluding to there, would help shield nations and also private sector players from erratic disruptions of prices. And so this price floor would be part of that. They also pointed out potentially reference prices then would operate as a floor, and that would be maintained through adjustable tariffs. Of course, we've heard them talk about tariffs quite a bit. Now, in terms of progress, we did see, as you can see there, a number of nations were present. We saw the European Union, Japan, Mexico all agreed in some way to set up new policies. Although they are still in discussions about specific bilateral and binding agreements, which is what they ultimately want to seek. But it really does build on what we've been hearing from the Trump administration over the past few days, which is this focus on securing critical minerals for domestic production. We heard Trump administration talk earlier about this $12 billion plan to stockpile critical minerals, and even heard Robert Friedland of Ivanhoe speaking about his own contribution to this. So it seems like there was quite a bit of consensus that there does need to be some unification on how to stabilize the markets, but getting there is still going to be determined, especially if you speak from where I'm sitting from, which for Africa, there's quite a bit that they still have to negotiate for their own terms.
Yeah, and on the back of that, there actually were a series of bilateral deals that got signed. Who was involved in those?
Yeah, we actually got word that at least 11 bilateral deals were signed. A number of them were focused then specifically on what I was talking about, just again ensuring that both sides, both nations do have access to these critical minerals. But then if we just take a step back and focus in on what ultimately is going to be a key issue, and that is, of course, the reliance on China, which has a dominance on the rare earth industry at this point in time, home to about 90% of rare earth minerals. And then if we just zoom in again on what exactly China is accessing across the African continent, which is home to a number of developed and underdeveloped reserves and mineral deposits, China, again, still has quite a bit of a stronghold. And so a lot of these agreements are in good faith, but still our reporting is suggesting that there still needs to be some sort of discussions to be had in terms of how this then works with the Chinese counterpart. And coincidentally, we also did hear President Trump did speak to Xi Jinping on the phone on Wednesday about a number of things. Of course, they have a meeting coming up in April, but the question still remains, how do the scales tip in terms of the dominance of China just as a player globally, also here on the African continent, where a number of countries are also looking to strike their own trade deals with the U.S. We saw a few of those leaders there in D.C. Meeting with some of the leaders, but still waiting to hear the outcome of those events.
Jen, thank you so much. Bloomberg's chief Africa correspondent Jennifer Zapasasha in Johannesburg. Well, next week, miners from across the continent will meet in Cape Town for the annual Mining Indaba conference. And Jen will be there, too, speaking with key executives, including from Debswana, Ivanhoe Mines, and Valterra Platinum. And a look at equity markets before we head out. So we've been speaking about the tech rout. It's taken off about $1 trillion worth of market cap in this market, not just in software, but also chip makers as well. Keep an eye out on Alphabet, Qualcomm, ARM today, all of them reporting and down in extended trading this morning. So that's your setup. And don't forget, we have the ECB and Bank of England meetings to watch out for later. European markets are down about 0.3%. That is it, though, for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.